Here we are and away we go. Welcome to Be the Boss of Your Money. I'm Mitch Goldberg, your host. This is a show called Be the Boss of Your Money because I want you to be the boss of your money, not your money to be the boss of you. This is the place we go to learn about money, investing, personal finance, business, and other really cool things. So let's just jump right into the value add. I'll tell you what it is. Kodak. And if you know what happened, it's kind of stupefying and mind-boggling. So let's roll the intro, and then we are going to go into a deep dive. Hey everyone, thank you so much for joining me. My name is Mitch Goldberg. I'm a financial advisor with the wealth management firm Client First Strategy. You're watching Be the Boss of Your Money. It's my live stream. It's your place to learn and to gain deep perspective just to get better with your money. It's about money, it's about investing, personal finance, business, and other cool things. If you're watching this in the live stream, welcome. Thank you for watching. Certainly, if you have any questions, ask away in the comments. Your words of encouragement are always appreciated. Words of wisdom are always welcome here as well. If you're watching this in the replay, I'd like to welcome you as well. I think most people do watch this in the replay, but it's fun when you're here in the live stream. But if you're watching this in the replay, if you have any questions, you know what to do. Ask away. I'll see the questions. I'll get the alerts, whether if you're watching on LinkedIn or Facebook. Sorry on YouTube, I did have to disable the comments in there, but hit me up on LinkedIn or Facebook. I'm easy to find. All right. So let's just jump into it. We always like to start with some perspective. By the way, I would love it if you would catch me on LinkedIn or Facebook as well, if you haven't already, if you're watching out there on YouTube. But let's just do a quick share screen. We'll do some perspective. Anyone can give you an update, but if there's no perspective behind it, it's just useless information that takes up space in your brain. And we don't want that. We don't want anything taking up space in your brain, right? Come on, you have enough on your mind. Hey, guys, I'm over here on the side over here. Side right there. Okay. What's up, everybody? Dow up 160. S&P up 40. NASDAQ up 140. Overall, not a bad day. Hey, listen, we'll take it. The Russell up 2,000 points. The Russell 2000 small cap index. Small caps are more sensitive to the domestic economy, whereas large caps are more global. So they get a lot of their earnings and revenue from overseas. The VIX is a little below 25. Remember, I said to you a long time ago, and for a long time, I've been saying the line in the sand for the VIX has been 30. Got to get under 30. Now we're under 25. That just means a fear gauge that the lower it goes, it means there's less fear. That it means that professionals, big money managers, sophisticated traders are spending less money on hedging their bets. That's what that means. So now the new line in the sand is 25. We're barely holding it, but let's see how it goes. But overall, a pretty good day led by what else? Some text. We'll take a look at the big tech stocks. They just basically recovered a lot of what they had lost the last couple of days. Not all of it, but a little bit of it. And I want to show you a new line in the sand. So overall, nice up day. You see this line over here? I don't know if you could see in your small little screen there, but if you can see that dotted line, that's the stock market. The S&P closed on December 31st of 3,230. We are ever so slightly above that. We hit this in June, and we've been bouncing around toward the end of July. Look at that, August. We're right up to August. But that's the new line in the sand. For a long time, I was saying the 200 moving day average is the line in the sand. We need to close above that. And I said if we did that, we would go up a lot more. And it came true. Okay, listen, March 23rd, I said we hit the low for the year. So far, so good. And now I'm saying we need the market to convincingly stay above the December 31st close of 2019, because that just means that the longer it stays above that, the more confident investors could feel that we are going to hold on to the gain since the market bottomed out on March 23rd. Let's take a look at some of the coronavirus stocks. Amgen, well, down a little bit, but let's see the ones that you would know that are in the news a lot. Novavax down over 2%, Biogen down 1%, BioNTech down 3%, Moderna down 2.43%. So some of the healthcare type stocks, Lilly was down 0.5%, Gilead down just about 1%. So a lot of these medical biotech stocks, I know it sounds crazy, but they're not, they trade up a lot on announcements of good news in a drug trial or some kind of drug result. But after that, they sell off. And that's the nature of biotech. They are great with great news. But, how many days of the year are you going to get great news? I'm not saying all of them, but, I'm talking about the ones that are really all wrapped up in just one product, one trick ponies like a Moderna. Okay, just for COVID. Let's take a look at the FANG stocks. Facebook, nice day, up over 1.3%. Apple up $7. Amazon up 33. Amazon, stocks are still off their highs, but look, an up day is an up day. I'll take it. Google back up $20. Microsoft up $2, up 1%. So not a bad day. Netflix. Well, Netflix happens to be the smallest of these companies, so it'll have the least impact on the S&P 500, but still it is one of the bigger companies, top 10 companies on the market. Okay, so let's take a look at my favorite dashboard. Energy leading the way up. That's good. Real estate, it's okay. It's more of a function of interest rates to me than anything else. XLF, the financials. Look, I follow the 11 sectors of the economy every single day. I follow them by following the tracking ETFs, just what I'm used to. It's my favorite dashboard. I know where the prices are. I could take one look at this dashboard and know what the day is like without reading any news because the price tells you. XLF was pretty good. Industrials. So overall, the kind of stocks that we want to see go up. The bottom of the heap was staples, utilities, and that's more or less what you want to see at the bottom. Okay, but nevertheless, a lot of upward momentum. Okay. By the way, just a couple of quick things. If you're watching this on live stream and you have a question, I would love to hear from you. I see you out there. Thank you so much. Gary, Jay, Judy. Judy, what's the deal with the like? Usually give me a heart. Like, come on. Something wrong here? Get the heart, right there. You got to go change it. All right. So let's just go into the heart of the matter of what I want to get into. This is going to be very quick because I don't really have a whole hell of a lot to say about it, but the story is Kodak. And remember back in around, like the year 99, 2000, that was a crazy time in the market because stocks were running up so much, so fast. And lately we've seen that again with Hertz, which is a bankrupt company, which took off a lot on Robinhood. Or because of Robinhood app traders. I'm not knocking Robinhood traders. You're allowed to do whatever you want. I don't knock people as long as you're learning. That's the key to it. I've put out a ton of content about Robinhood, by the way. Some of it's on my YouTube channel. Some of it you could scroll back in my LinkedIn and Facebook profile. Some of it's on my Instagram. All right. But so what I want to stress though is when I see stocks like Tesla go parabolic, and I see a lot of other stocks go parabolic, going they kind of trade and then they shoot up. Hockey stick, they call that. So it gets people wondering, does that mean we're at a top? Because typically a market top is marked by massive speculation on the part of retail investors. And Kodak today was up over 300%. When I took the thumbnail picture to make the thumbnail for this live stream, we did the picture like this, like that. Okay, but I took a quick snapshot of a quote of Kodak. It was up 410%, and the stock was actually halted 15 times during the day. I have never, ever seen a stock halted so many times in a day. That is just insane. Even like the flash crash in 2010 when Procter and Gamble went down like 99.99%. Obviously, it was a trading era, computer era, but even that stock didn't stop trading 15 times. Okay, so and at one point the stock was up over 500%. So, but it still closed up over 300%. The deal was they got a big loan guarantee from the government, like $750 million to produce much needed chemicals, to produce these chemicals domestically. These chemicals are for the pharmaceutical industry. And the worry is that, if all of our pharmaceutical ingredients are coming from China, and we have a trade war with China, that could really hurt the health of our nation, because we won't be able to manufacture medicines without without importing the raw ingredients. So we're doing more of these things here. So Kodak gets this big, gigantic order. Now, keep in mind, even right now, it's only a $1.5 billion market cap. This Kodak that we're talking about, Eastman Kodak, this is nothing at all except for name, like the Kodak of yesteryear. Eastman Kodak was a blue chip. It was like the first stock that I ever recommended to clients when I first got into the industry over 30 years ago. Was Kodak, and Kodak was a major company. Their sales pitch was not just film, but making memories. And again, it was a blue chip. You have the Eastman School of Music. You go to Rochester, New York, where Kodak started. It's like the whole city is named after the family, the Eastman family. Not the whole city, but a lot of things. I mean, the mark of Eastman Kodak is alive and well in Rochester. But the Kodak today, it's nothing. It's not even a shell of what it used to be. Today, it finished at about a $1.5 billion market cap. So this was, a tiny, teeny little micro cap stock before this big run. But so if it has any like household name appeal to you, I don't want you thinking like, oh, it's a household name, now it could go back and I'm buying a really solid name. Forget the name. The only thing about this company that is possibly familiar to you is the name, but it's not the same company. It's a micro cap. It's basically like a speculative, over the counter stock, and the way it's trading, up a couple 100% in a day, up 500% at one point today. It's beyond unusual. So just want to say, when you have these kinds of runs in a stock, it becomes I become weary of the overall market. About 60,000 accounts on the Robinhood app purchased Kodak. So it's it's in the hands of a lot of speculators, a lot of chasers. Fine, have fun, learn. Again, I say use it as a learning experience. I don't know if that's really where you want your serious money. There are a couple of things though that I learned about Kodak looking into this, and something stinks, and I want to share this with you. Trading activity picked up in shares of Kodak before the company announced that it had been tapped by the Trump administration to manufacture drug ingredients. The stock's volume had already been spiking up, and the price was spiking up before today, and before the announcement came out that they would be getting this giant loan from the company. And the CEO says, "Oh, obviously it was a well-kept secret, and we kept it under wraps." I'm sorry, I have to call bullshit. I don't believe him. I don't think that's really true. Plus, the CEO insiders bought a lot of stock just before the announcement, and the stock on Monday traded 1.6 million shares, surpassing Friday's 74,000 shares and Thursday's 80,000 shares. And that's like a massive jump in the amount of trading just a day and 2 days and 3 days before this big announcement came out. When you have that kind of jump in volume, you have to be wondering, where the heck did that jump in volume come from? So somebody knew something, word got out. I think something stinks, and that's a problem for the market. Okay. You could read the article yourself, but on June 23rd, the CEO purchased 46,000 700 additional shares, probably at a very low price. And the stock is up many multiples of what he put into the stock. So just the timing. And listen, like comedy, right? Timing is everything. Another article I read: move over. Tesla Robinhood day trading crowd finds a new speculative favorite in Kodak. In 24 hours, this is what I was saying, 60,000 users added the stock to their portfolio. Look, are people buying the stock because they see something really good about it, or are they, it's just going up, so there must be something good about it? And I think that's what it was. It's just a feeding frenzy. It's just a very speculative situation. And the stock, by the way, was a good deal off its high of the day. So a lot of people who purchased the stock, the high of the day was 60, and the stock closed at 33. So that's a really big jump. So if you chase the stock, let me just move this for a second. If you chase the stock today, there's a really good chance you could be down 10, 15, 20, $30 a share. And that's the problem with trading just because something is moving very quickly. I don't know what the deal is with the $760 million loan guarantee. Do they keep it? Is it money good? I just don't know. And when you invest in a stock, unless you're just speculating, you're gambling, or you're having fun, that's okay. But if you're investing in something, you should know these things. So to me, this is just another sign of, I hate to say it, of toppiness in the market, and you're getting these speculative fever type stocks on the part of retail traders. Look, I'm not knocking retail traders. Retail traders are basically my clients, but I want to keep my clients out of trouble. It's not that I don't want to see them do really well. I just, more often than not, if you're not early to these things, and how are you going to be early to these things? That's why so many people jump in after the news comes out, and you could see the stock is, it was up to 60 and it closed at 33. That's an insane drop at the end of the day. That's just terrible. I know we have a comment out there, question maybe, or comment. Hey, Mitch Goldberg. Alex, good to see you, buddy. Thank you for always showing up and your support. You threw me a shout out the other day on a Jillian's post, or was it Jillian Circus post? But I really appreciated that. Thank you very much, buddy. I really appreciated that shout out. It means a lot to me. So, beware of, beware of speculative frenzy stocks like this. Maybe it keeps going up, maybe not. But I've seen how these end. I saw how Bitcoin did. You saw how the pot stocks did. Yes, somebody made money on these things, but it probably wasn't you, because unless you're very, very early in these things and you really want to pick up, stocks that are probably doomed to go worthless, then it's hard to make money in this. That's hard to make money at all in these kinds of stocks. But it's just when I see the speculative frenzy, unless you were in it early, you probably got badly burned, because the stock closed up 300%, a little over 300%, which is an amazing. The stock closed up 318%, but it was up 500% earlier in the day. All right, so that's my story. I'm sticking to it. Thank you, Natalie. Thank you, James. We already got you, Gary, Jay, Judy. I'm going to be back tomorrow. I'm going to have a special guest tomorrow. His name is Adam Posner. Really cool guy, really smart, and in my world, he's just a good guy to know. He runs a podcast called The Poscast. It's globally recognized, and in his field, the career field. So we're going to do that tomorrow. It's going to be great. So please tune in tomorrow. We're going to get started at 4:30 sharp, and I'll see you then. Thank you.